Joining me in the studio for a look at the markets is Dylan Bester, Director of Skycastle International Investments. Thanks for coming in, Dylan. So tonight, there could be a rate cut in the US.
Certainly. I mean, we've got everyone on edge at the moment trying to figure out whether the Federal Reserve will cut 50 basis points or will be cutting 25 basis points. And the market's been pricing in their overall 50 basis point cut and further two more going into the end of this year. So it's quite the biggest theme today as well over in the Federal Reserve.
Overall, I mean, there's a big political campaign now talking about how they're going to get Donald Trump out, the Democrats having their talks. But I mean, what would be your assessment of the economic performance since he took power?
You know, it's been a very good time. I mean, we've seen over the 2016-2017 period, we've had economic growth growing. We've only seen at the end of 2018 now sort of economic growth slowing. And this is partly caused from Donald Trump based on the trade wars that he started and the extra tariffs that he increased on China. So we are seeing a bit of slowdown coming in this last year into the economy. Let's call it the last 3 quarters in the US economy, and it's starting to filter across the globe. So I don't think it's a US story, it's more of a global story, and it is slowing, but this is partly brought on by the trade tariff war that he's caused over a year ago.
And there's also some news about Apple.
Apple, yes. Apple giving some good guidance out today with their earnings results. And they're pointing out that obviously the Chinese business, where they were focusing on growing a lot more, is actually picking up as well as they expected. But the US side of the business is slowing as they anticipated. And they're moving more into sort of the fourth industrial revolution, where your wearables and your home devices that are all interconnected and linked. And that's picked up massively in the US. And this has given Apple quite a boost this morning in trading in the US. So they're up roughly 4% at the moment. So it's been quite a good day for Apple. Investors are liking the guidance that's been given, and they're liking the current results that are out.
And what about general earnings in the United States right now?
Well, coming into this earnings season, we had analysts and estimates coming in a lot lower than they were last quarter, showing that the companies should generally underperform, and there is a general slowdown happening. So what we have seen is these companies are outperforming. Majority of companies from across the board, from tech to consumer discretionary staples, all your big names are continuously beating these estimates, and there's only a few outliers that are underperforming. So we've only reported around 45 to 50% of the overall S&P index stocks, but looking positive and looking good.
And you know, where do you think the smart money's going in this present time?
Well, I mean, it's the money at the moment is staying in cash, most definitely. Guys are very cautious, so investors are very cautious at the moment. Based on tonight's rate cut, we could see a big switch in terms of where money could flow. I mean, everyone has been going to the bond and treasury market to protect themselves from potential downturn. But if we start seeing the rates getting cut and 3 more this year, we could see the money flowing back out of bonds and into equities once again to boost the equity market. So it's quite a big decision that's happening tonight, and definitely all investors are watching where this could lead us in the next 3 to 12 months.
And how likely is it you think it might have a positive effect back here when it comes to rate cuts?
Well, I mean, in terms of the flow back here, it definitely will be. South Africa's always benefited from a strong bond market as well as a good carry trade market, where we've got foreign investors borrowing money in their own currency and investing it here in South Africa and just obtaining that yield that they receive across border. So on a basis, the carry trade is still alive, it's doing well, and generally we should see more investors coming into South Africa, and we should see the rand strengthen slightly on the back of this and continue to stay slightly stronger.
And as for this Brexit story, I think your guess is as good as mine and how it's going to affect the world economy. It seems that the new PM, Boris Johnson, he's packed his cabinet with Brexit loyalists. He looks like he's going to go ahead for a no-deal Brexit, but it's going to be a catastrophic, I think, for British industry and trade.
Most certainly, I do agree with that. I don't know the end game here either. I have noticed that got a lot of information that a lot of the UK companies that are based in the UK have already set up offices outside of the UK, and UK citizens are willing to travel out of the UK into the Europe to go and occupy these jobs. But the question still remains, will they need visas? How will they get across? Are they able to do so? And this will all come into the Brexit deal if they were to get to that negotiation table again and go through it. So I think for UK citizens and investment in the UK, it's going to be a very tough time ahead. We're seeing the pound weakening quite drastically at the moment based on this fact.
Well, not only that, I mean, a flight of skills as well. A lot of European citizens, the best financial European citizens, are working in the City of London. and now there's a chance they'll have to up sticks and go back, and all those skills and expertise will be lost.
Yeah, I mean, in the general overall system, I don't think they'll be lost. They'll just be transported out of the UK. So net, I do agree the UK economy is going to suffer drastically and lose a lot of skill sets, and they might have to rely on their industrial power once again.
Maybe. I mean, actually, probably they're not making enough as it is, if you think about it like that. But how do you think this neck of the woods is going to feel the effects of this withdrawal from Europe?
Look, I mean, the UK have been quite open and vocal about the fact of coming out to emerging markets and supporting those economies, and I think that is the only opportunity for them to grow substantially and get a bit more trade going. South Africa does. I hope we do benefit from that. In the current economic climate, where we have got sort of our developed markets slowing slightly, the likes of China and the US, we're seeing our local markets. We're not seeing great economic pickup here, but we are seeing the benefit of some early investors coming into emerging markets to try and benefit from low prices, assets that have been undervalued completely. So there is a lot of opportunity for us here in our country at the moment.
Thank you very much indeed for your time and insights. That's Dylan Bester, Director of Skycastle International Investments,